Hello guys, this is Finance Balance. Welcome to my YouTube channel. Did you know that reverse mortgage applications have skyrocketed in recent years? It's true. More and more seniors are turning to this financial tool. While traditional mortgages require monthly payments to the lender, reverse mortgages flip the script. With a reverse mortgage, homeowners 62 and older can convert their home equity into cash. This can provide much-needed income during retirement. As the cost of living rises and more people reach retirement age, it's no wonder these loans are becoming increasingly popular. However, it's essential to understand how reverse mortgages work before jumping in. Like any financial product, they come with their own set of rules, benefits, and drawbacks. Let's dive in and learn more about this increasingly popular financial tool. In simple terms, a reverse mortgage is a loan that lets you access the equity you've built up in your home. This means that over the years, as you've paid off your mortgage and your home's value has increased, you've accumulated a significant amount of equity. A reverse mortgage allows you to convert this equity into cash without having to sell your home or move out. Think of it as a way to tap into your home's value without having to sell it. This can be particularly beneficial for seniors who wish to stay in their homes, but need additional funds to cover living expenses, medical bills, or other financial needs. Instead of making monthly payments to a lender as you would with a traditional mortgage, you receive payments. These payments can come in various forms, providing flexibility based on your financial situation and needs. The money can be received as a lump sum in monthly installments or as a line of credit. This flexibility allows you to choose the option that best suits your financial planning and lifestyle, or as a line of credit. This line of credit can be particularly useful for managing unexpected expenses or for having a financial safety net. The loan doesn't have to be repaid until you sell your home, move out permanently, or pass away. This means you can continue to live in your home and enjoy the benefits of the loan without the pressure of monthly repayments. Reverse mortgages can be a helpful tool for seniors facing financial challenges in retirement. They offer a way to leverage the value of your home to improve your quality of life. They can provide a financial cushion, cover unexpected expenses, or help with day-to-day living costs. This can be especially important for those on a fixed income or dealing with rising healthcare costs, or simply supplement your income. This additional income can make a significant difference in maintaining your standard of living and ensuring you have the resources you need. However, it's crucial to remember that a reverse mortgage is still a loan. This means that interest will accrue over time and the loan balance will increase. It's essential to understand the terms and conditions before making a decision. Consulting with a financial advisor can help you weigh the pros and cons and determine if a reverse mortgage is the right choice for your financial situation. There are many misconceptions surrounding reverse mortgages. Some people believe the bank takes ownership of your home, but this is not true. You retain ownership of your home throughout the life of the loan. The lender only gains ownership if the loan terms are not met, such as failing to pay property taxes or maintain homeowners insurance. Another myth is that reverse mortgages are only for people in dire financial straits. While they can certainly be helpful in those situations, they can also be a strategic financial tool for anyone looking to access their home equity in retirement. It's crucial to separate fact from fiction and consult with a trusted financial advisor to determine if a reverse mortgage is right for your individual circumstances. 62 years old. This age requirement ensures that the program is targeted towards retirees and older homeowners who may benefit the most from this financial product. Additionally, you must own your home outright or have a low mortgage balance that can be paid off with the proceeds from the reverse mortgage. This ensures that the lender has sufficient collateral. The amount you can borrow depends on several factors, including your age, the appraised value of your home, and current interest rates. Generally, the older you are, the more you can borrow, as the loan is expected to be repaid sooner. Reverse mortgages offer several potential benefits. One of the most attractive features is that the funds you receive are typically tax-free. Additionally, there are no monthly mortgage payments required, which can significantly ease financial burdens. The flexibility to use the money however you see fit is another major advantage. Whether you want to pay off existing debts, cover medical expenses, or even take a long-awaited vacation, the choice is yours. However, it's important to weigh these benefits against the potential drawbacks. One of the primary concerns is the high upfront costs associated with reverse mortgages. These typically include significant closing costs and fees. High upfront costs can eat into the amount of money you receive, so it's crucial to understand all the fees involved before proceeding. Another drawback is the decreasing home equity. As you borrow against your home's value, your equity decreases, which means you have less ownership in your home over time. This can impact your heirs as they may inherit less or have to sell the home to repay the loan. It's essential to discuss these implications with your family to ensure everyone understands the potential outcomes. Understanding these factors is crucial in making an informed decision. Consulting with a financial advisor can provide additional insights and help you determine if a reverse mortgage is the right choice for your situation. Section 5. A real-life example. Turning home equity into financial security. Let's look at a fictional example of how a reverse mortgage can provide much-needed financial relief. This is a story about Sarah, a retired teacher who found herself in a challenging financial situation. Meet Sarah, a retired teacher living on a fixed income. She spent her life educating young minds and now enjoys her quiet days reading books and reminiscing about her teaching days. However, life threw her a curveball. Unexpected medical bills and rising living costs put a significant strain on her finances. The stress of managing these expenses began to overshadow her peaceful retirement. Sarah was hesitant to sell her beloved home, a place filled with memories and comfort. She needed a way to bridge the financial gap without losing her sanctuary. After careful consideration and consultation with a financial advisor, Sarah decided to explore a reverse mortgage. She learned that this option could allow her to tap into her home equity without having to sell her house. The loan allowed her to access a portion of her home equity, providing her with the financial security she desperately needed. The process was straightforward, and soon Sarah found herself with the funds she required. Sarah used the funds to cover her medical expenses, ensuring she could get the care she needed without financial worry. She also supplemented her income, making her day-to-day living more comfortable. With the extra financial cushion, Sarah even managed to enjoy an occasional vacation, something she had longed for but thought was out of reach. She visited new places and created new memories. The reverse mortgage gave her peace of mind, knowing she could stay in her home and maintain her independence. Sarah's story is a testament to how leveraging home equity can transform financial stress into security and freedom. Section 6. Making informed decisions, key points to remember. Reverse mortgages can be a valuable tool for some retirees, but they are not one size fits all. Here are some key takeaways to remember. Reverse mortgages are loans, not free money. You are still responsible for property taxes, insurance, and home maintenance. Shop around and compare offers from different lenders to find the best terms and rates. Seek advice from a trusted financial advisor or HUD-approved counselor to understand the implications fully. Remember, knowledge is power. The more you understand about reverse mortgages, the better equipped you'll be to make a decision that aligns with your financial goals. Section 7. Let's talk about it. Your thoughts on reverse mortgages. What are your thoughts on reverse mortgages? Have you or someone you know considered this option? Share your experiences and insights in the comments below. Let's start a conversation and learn from each other. Section 8. Planning for your golden years, resources, and next steps. Planning for retirement is crucial, and reverse mortgages are just one piece of the puzzle. For more information on retirement planning, check out these helpful resources. The AARP website offers a wealth of information on retirement planning, including reverse mortgages. The National Council on Aging provides resources and support for older adults, including financial counseling. Remember, it's never too early to start planning for your golden years. Seek professional guidance, explore your options, and make informed decisions to secure your financial future. Thank you for watching. Don't forget like, comment, subscribe, and press the notification bell.